All right, and welcome back to another FogCutter Live. I'm Mike Curtis here with Preston James, founder of Traders Edge Network. And like always, we want to help you kick off the week, cutting through the noise and the chaos out there in the financial market. So, Preston, say hi. What do we have on tap for today?
Man, it's always interesting coming here on a Monday, Mike. We had the big Friday reaction to the Fed, the Fed chairman's testimony on Friday. Just the market would kind of got confirmed that there was going to be a rate cut in September. We just saw one of the biggest Fridays ever, so that kind of helps frame this week in a way.
Yeah, definitely. And I mean, maybe we just start right there and elaborate on that a little bit. Because I mean, the market was having a little bit of a rough week, right? On Tuesday, Wednesday, we saw some selling. We saw a lot of things across the board dropping, and it was, probably due. The market had obviously covered a lot of ground, and we like to talk a lot here at Trader's Edge about balance. If the market runs too high too fast, sometimes it needs some profit taking or it needs to consolidate. Let some of the bulls buying appetite, if you will, kind of creep back in. And so we saw that rough start to the week. And then Friday, yeah, up in Jackson Hole, Wyoming, Fed Chairman Jerome Powell had a speech. Didn't say a whole lot, but it was enough to really ignite a fire under
Yeah.
the market. So, Preston, maybe you could elaborate on that a little bit, what he said and why the market just went into kind of some fierce buying mode off of those comments.
Well, the stock market has done and always will be kind of dictated by interest rates, and we've been in a strong cycle since the tariff lows in April, and the market averages a correction once a year since World War II. So we're recently done with that. And like you said, we've been on a torrid pace from April, just nonstop. And so markets are going to pause and take a breather. But it just happened to coincide with kind of culminating with what Powell was going to say, and the market was up so high on Friday just because uh, uh, it's anticipating a rate cut, but that was in doubt a little bit, but now it's sure again. And that's all stocks need. I mean, they have a real symbiotic relationship with interest rates and where they might go. So stock market's always forward looking.
Definitely.
That
Yeah.
so all saying a bunch of nothing really. I mean, the big thing was the market was up on Friday, and that's all we kind of need to know.
Yep, exactly. Yeah, lots of buying came in, volume behind it. Whether it was some buy the dip going on right after a little bit of that pullback throughout earlier of the week, the Tuesday, Wednesday, really we saw the market sink a little bit lower on those 2 days. But yeah, the main point, what Powell really said was, hey, we're looking at maybe shifting the policy a little bit. So really they've been in a holding pattern. It's been several meetings, not cutting rates. And so that little hint of, hey, we're looking at possibly shifting things was enough. I mean, that half a sentence really is what sparked it. There's
Yeah.
an old saying, right, in investing in the markets, don't fight the Fed. When they're in interest rate cutting mode, it's good news for the markets. It brings down borrowing costs. It can spark more consumer spending. It's good news for businesses on borrowing costs. So there's a big chain reaction that can happen when those interest rate cuts kick in.
Yeah, and Mike, just along those lines, stocks that I saw having some extra glee on Friday were home builders,
Mhm.
specific. Well, probably all of them, but the ones I watched the most are DR Horton, DHI, Lennar, LEN, and Toll Brothers, TOL. They had some pretty exceptional Fridays just because they're so interest rate sensitive.
Definitely, and that's on the backs of right, a couple of those were on the Warren Buffett list of some of the
Yeah,
companies, so they got a boost last week.
yeah,
Little double whammy tailwind for those.
exactly.
Yeah, so, that's kinda what we saw from last week. Sometimes seeing a big buying spurt like that can carry some momentum forward. We'll see the market started today with the futures down a little bit, and then we saw those just really the buying come in, kind of push things off those lows. So we'll see if that momentum really carries into the week. Looking at what's coming up this week, Preston, I know you got your eyes set on Wednesday. Just a little company is reporting a little bit of news, I guess, right?
Yeah, there's in case your our audience is not aware of this upcoming fact. I mean, this is one that really you have to sit down with and kind of contemplate probably for a couple minutes. And there's a single company out there that is 8% right now of the entire S&P 500. Mike, uh, uh, I, well, quarterbacks are smarter than ex linebackers, but even ex linebackers know that S&P 500 means that there's 500 companies. Standard and Poor 500 index means 500. But we're in a world today that one of those is 8% of that whole index, and it's Nvidia. And I think
Wild.
someone told me the other day you have to say it's not Nvidia, it's in Nvidia because there's no I after the end. But anyway, everyone knows what we're talking about. They announced this week after Wednesday's close, and Mike, I always try to step back in any era that we're in, and I ask myself, what what's the current idea whose time has come? And the main idea whose time has come is AI. That has to
Right,
be an answer that even Homer Simpson would be forced to agree with. The current idea whose time has come is AI. And the largest company in that idea is Nvidia, and they are
right,
announcing earnings after the close on Wednesday. And this company, we both talked about it, Mike, since the April lows has doubled. It
right,
went from a $2 trillion valuation to over $4 trillion valuation. And that's where we sit literally hours now before this beast announces earnings. And you and I know that it's not only just what they announce for earnings, because immediately when they do, they're talking about the past. And but what these companies and literally hundreds of companies are going to tailwind off of not only
mhm,
what Nvidia is announcing for earnings, which is the immediate past, but also what they see and talk about going forward, which is traditionally called the guidance. So all of that happens this week, Wednesday
mhm.
after the close. Wow. And
Yeah, and
do you
all
and I
eyes kinda
know
stop.
we don't know, we don't have any insight what they will no real I guess some people do, but we can't pretend that we know what they're gonna announce. We just know that they are gonna announce something.
Yeah, and I think all eyes kinda stop and digest that because they are such a big company, like you said, 8% of the S&P 500, but then on top of that, so many other companies in that AI sector, whether it's chips or software, whatever it might be, all feel a connection to that earnings report, and so it can send some shockwaves,
Yeah,
through the market in a big way.
exactly. Maybe 20, 25 years ago, the market probably got to a point on with Exxon's earnings. What are they gonna because energy. And if they're not doing well, then all the economy is not doing well. But we're in a different. We're now our era is what does Nvidia say about things?
Right.
Yeah, that's just what
It's
it is. You could argue with it, not agree with it, but that's where we are.
right. Yep, so that's the biggie to watch out for. Also on tap, this week, we have really the biggie. I mean, Thursday, there's some pending home sales. A few little things. Tuesday's consumer confidence, but the biggie on Friday is the PCE. It's kind of the Fed's preferred inflation gauge, right? We've got the CPI, consumer price index. We've got the PPI, which is the producer price index. But this week, we've got the PCE index that's reported. PCE is personal consumption expenditures. It's one that the Fed watches really closely. So, again, more kind of on the inflation front, more data coming out on Friday, right before the long holiday weekend, by the way, that will kind of get digested right on the backs of Powell speaking in Jackson Hole. So again, why is inflation important? Well, how we can offset inflation is through raising interest rates. That's how you combat um, prices jumping and inflation. So with the message Friday out of Jackson Hole that will, the Fed's looking at, maybe changing the stance from that hold to maybe a little more likely to cut interest rates. If there's really some hot pricing or, that PCE report shows an uptick in pricing more than expected, it could throw again a little bit of uncertainty towards the market and that interest rate policy and stance moving forward. So that'll be another one to keep an eye on this week.
Yeah, that's really a good insight there. And, some more earnings too on Thursday after the close. Um, Ulta Beauty announces earnings.
Mm.
It's just sometimes refreshing to talk about other stocks that aren't so pivotal and so I mean, they're anyway, just a different industry, with makeup and the beauty market, but, um, anyway, so some fun for the other earnings, including Dell, Autodesk, those are all Thursday after the close.
Yeah, good stuff. So Preston, on that note, some of the stocks outside of these that we're watching for earnings, always like to keep a tab on that. But anything else you've got your eye on as far as some opportunities, a potential money press position, anything like that that kind of caught your eye that we can share with people today?
Yeah, one thing that I kind of feel extra confident in. Well, first of all, we always talk about setup here, which always answer the question, hey, why this stock and why now? So we're really big here about setups. And if we take a look at a 1 year chart of Arista Networks, ANET, as I call it around here, um, very recently it came out with earnings, and that gap up here that you see just recently taking the stock to new 52-week highs. It was on one of the biggest volume days of the year. Um, and then what happened? Well, the market had some cooling because it had been on such a torrid pace. But I really like ANET because of how of the setup that it gave us. And then markets go through these pullbacks from time to time, and then it's almost a relief in a way. The market um, puts lots of different stocks that it kind of run away. I mean, we don't have to look at Palantir, but people can look up Palantir. Here the Nasdaq was down about 4% as what the pullback was, but a Palantir is down 20%. It's because they're these younger, more aggressive growth names, and they feel pullbacks more. But coming back to ANET, there's a real edge in odds on a name like this where it's very likely resuming its uptrending ways. It's been uptrending like a lot of stocks from the April lows, but I love how the setup recently tagged it to a new 52-week high, and how what that does behind the scenes, by the way, is it hits all kinds of other screens let's say the institutional investors. I mean, they're constantly looking for, hey, what's just recently been a new high? That it just gets on a lot of radars, and I love it for a money press. And so we started recently a money press on ANET, and just with this recent pullback, it's even more confirmed, in my opinion, that the market probably has more room to run. This is one of the stars. It's actually one of the pieces of the whole AI rollout, Arista
Mhm.
Networks. And I'll just say one more point, Mike, that people don't really see me trading the Apples and the Nvidias um, with our strategies. And I'll just say this: I find more bang for the buck on my ROI with companies that are maybe less visible than those top ones. It seems to be, I don't know how to explain that. Maybe you can take a crack at this, but like when you see the Teslas and the Nvidias and Apples, and they have so many eyeballs on them, it almost seems like you don't get as much premium from them as you do from like a Salesforce.com or an ANET. I guess they are second class citizens in the world that Nvidia owns, but I mean, again, I just tend to get more better ROI when I don't go to and trade the Nvidias and the Apples.
Right. Yeah, and I think, these companies go through some of that really major growth phase, and then they get to the size like an Apple. I mean, for Apple to double their business becomes almost impossible, right? They're so big, they're so traded institutionally, right?
Yeah,
If you go look up any hedge fund, any mutual fund, I mean, what percentage probably owns some Apple in it, right? It's so
yeah,
they become such a big piece that those premiums um, drop a little bit on the option side. And what
right.
that means is, you might look at $100 stock and the at the money put is trading for a dollar. And then you look at another $100 stock and that at the money put is trading for $2. Okay. So both $100 stocks, but one, if you're a put seller, which is what we do in the money press, you could be making twice as much potential income because that stock has, we like to call it juicier option premiums. Really, it's just you have more income potential because these stocks aren't the big behemoths. They're not so institutionally traded. They might be a little more volatile. And so those option premiums get to enjoy a little bit more implied volatility baked into those. So, yeah, to
Yeah,
Preston's point, you do get a little more bang for your buck. And it's the same concept as if you're trading an ETF, right? An ETF, an exchange traded fund, represents a basket of stocks. And we have people that love to money press ETFs. And there's a lot of benefits to that, but you're just getting a little bit lower ROI, kind of the same idea with an Apple and some of these bigger stocks.
yeah. There's some term or two that I'll have to. I don't know. I don't know more, but the bottom line is ANET more juicy options.
Right.
Apple, less juicy option. It's just what it is. Like you said, Mike, that's the real takeaway on a money press strategy. We're aiming weekly and selling and taking in this premium. And anyway, it's just kind of how the cookie crumbles.
Yeah, and the beautiful thing about the money press is even if ANET, right, we had this nice run from those April lows, it explodes higher on earnings. And if it's, chopping around, consolidating for a couple of weeks before, that uptrend resumes, if that uptrend resumes, we can still generate some income. The money press is built, right, to profit, even if the stock goes sideways for the week, even if the stock slightly ticks higher for the week, even if it drops a little bit, we could still make some income by being that put seller. So the money press is such a great strategy. Um, it can really take advantage of those natural forces that we see out there. So anything else on
Yeah.
ANET or on that note, Preston?
No, no, it's just and that ANET's a placeholder for, there's all kinds of other companies too that it's fun to do the money press on. We're in money pressville right now. This is money
That's right.
press time. So it's
Definitely.
fun. Yeah.
Definitely. So good stuff. I think we hit a lot on last week. What's coming up this week? So maybe we got a fun story from Mary S. She's out of Palmyra, Virginia. And Preston, one of the things that people love about Trader's Edge, they love about the money press, is you can start with a smaller account. You can get going with a few $1,000s. We have clients that are trading, you know, $1 million accounts, $5 million accounts, couple 100,000, but you can start small. So I loved this story that Mary sent in.
Yeah,
She said, I'm excited. My money press trades overall have reached $338 in profit. I know that's a small amount for many, but given I'm working with the small account, I'm excited for these baby steps.
absolutely.
She said, Preston, before she found you, Mary had tried trading based on other gurus only to lose money, not knowing why. So we try to keep it simple here at Trader's Edge. He said, while I appreciate Preston's insight into his trades, I also appreciate the why behind the trades, the actual education, helping people understand why we're trading this, why the timing, why the money press works, why we've built it like we do. And then she finished off the note by saying, my husband and I celebrate our anniversary next week and are taking a little trip. So this will come in handy. Thanks, Preston, Mike,
Awesome.
and the team. So pretty awesome from Mary. Hope she
I
has an awesome anniversary.
That's great. Oh, sure happy for you, Mary. We're just happy and honored to have you just to receive that and read that. That just kind of makes my whole week, and it's just a Monday. So,
Yeah, we love it. We love hearing that feedback. Preston's wall. We moved into this new office a couple years ago, and these designers came in, made Preston's office look beautiful, and then he's just covered the entire wall with
yeah.
emails and text messages, printouts of these of stories like Mary. If the designers saw it, Preston, they'd probably be turning over in
Yeah, and if
in their
someone
sleep.
did a crappy job, it's all covered over anyway, so
So we love it. If you're not trading the money press, Preston wants to send you a free book. Just cover the $7 in shipping. It's free moneypressbook.com. Get your hand on your free copy. Along with that, we have different video trainings, all sorts of things where we've just tried to keep it simple to the point where you can get up and running, understanding the money press, even if you don't know options. If you've never traded options, we've got your back. Go check that out. Get started. We're doing it. All the Trader's Edge clients, our family, friends are doing it. It'll just be a lot more fun having you involved. So go check it out
yeah.
and get trading the money press. So
I
anything,
like that, Mike. Yeah, one thing I'll add to that is, it's all I just remember learning this from an early business mentor of mine. He just said, "Look, if you're gonna start a business or you're gonna do anything out of the ordinary, it's just gonna be scary, right?" And so he said, "Look, you can either be in life, you can either be afraid and frozen or scared and moving." And when you think about it, so why not, if you're gonna be scared anyway, why not move? Why not just move a little bit? And like you said, Mike, and what Mary said is you can do this in a small way, and this wasn't always the case in the options market.
very true.
To do something very small in the options market, you do it with one contract. Well, 20 years ago, if you were trading with Merrill Lynch, a full service broker, you could be paying $100 commission every time, even if you do one contract. And that's one contract to sell it. And then if you want to buy one to protect, you're can't even get out from under with and I say to do real trades because you learn the most that way. But what's fun today is you can really start small because there's no commissions anymore. We're in a world where you have more choice, there's more strike prices, more people in the soup with options, so there's more volume, and it's all more choice on the stocks, now the weeklies, and no commission. I mean, there's no better time to learn this if someone's brand new and like, "Hey, I'm kinda scared," or whatever. Well, there is some learning curve, and you are gonna be scared. There's no doubt about it, but I'd rather be scared and moving than afraid and frozen.
No, that's great insight. A good note to end off on, Preston. So thanks for all your expertise, all your decades of trading and investing experience just comes through, and hopefully these Fog Cutter lives are helpful to our audience. I know we've gotten a ton of amazing feedback. So we'll see everyone next week. Like always, we'll have a fresh week of things to discuss and look forward to. Um, and of course, next week we have that holiday shortened week with Monday
Yeah.
being Labor Day. So thanks so much, Preston, and we'll sign this one off.
All right. Thanks, Mike. Thanks for everything. See you guys.
See ya.